Good morning, colleagues, and welcome to our today webinar dedicated to recent changes to the Russian tax system and other tax trends which influence current tax environment in Russia. Before we start with the main material, and I will let a minute or two for other participants to reconnect, let me please introduce myself and again a little bit the topic of our today webinar. My name is Maria Kabanova, and I'm a counsel and the head of tax practice with Seamless Legal Law Firm. And today, as I just mentioned, I will be speaking about recent changes to the Russian tax landscape and also about the way it influences the international businesses carrying out their activities now in Russia. Um, so Today webinar is actually mainly aimed at the international audience, which is why indeed I will be mostly focusing on changes and trends which are relevant for the international businesses, which either make part of some international groups or participate in transactions with some foreign counterparties, but I will as well be mentioning other material changes to the Russian tax law, since our time today is limited and the agenda is quite loaded. Maybe I will be focusing on some topics just briefly, and if you would like to get more details on some of the topics I will be mentioning, please feel free to contact me after the webinar. Also, I wanted to mention to you that you have the Q&A section on your computer, and you may use this Q&A section to ask any questions to me. I will most probably be answering them in the end of the webinar, but please feel free to print them whenever you have these questions, and I will try to answer everything during the webinar. With this first slide, I just wanted to highlight very briefly the recent trends and maybe some even conflict between them, between what is happening in the Russian tax environment right now and what we see within last several years is a very strong trend on increase of the tax control and increase of the tax burden for various categories of the taxpayers. So we had the increase of tax rate for all main taxes such as corporate profit tax, personal income tax, effective from year 2025 already, and we have the VAT increase effective from year 2026, on which I will focus a little bit more on my next slides. And this increase of the tax rates is also combined with the increase of the tax control procedures. So we see both the number of tax control procedures being increased and the tax collection targets. Even in some latest presidential directives pronounced at the beginning of this year, one of the key targets was to increase the collection of taxes in Russia. On the other hand, when I communicate with the representatives of international business, my clients, and I analyze the requests stemming from them, the most frequent ones are those related with various possibilities to transfer cash out of Russia, which are quite limited at the moment. So there are multiple questions regarding payment of dividends, payment of management fees, deductibility of management fees, and also quite a lot of questions are being faced regarding restructuring of some historical debts and exercising the transfer pricing adjustments. So this would be like the main topics I will be circulating around during today's webinar. So speaking about the key changes to the Russian tax system, as I have already announced, one of the most material changes is the increase of the VAT rate from 20 to 22% effective from 1st of January 2026. Apart from them, there was also a minor extension of the scope of votable flows. Those are mainly internal operations regarding banking processing or rent of mining infrastructure. And also, since previous years, certain taxpayers under the simplified tax system started paying VAT to the Russian budget. So from year 2026, the revenue threshold at which such taxpayers become obliged to pay the VAT has been reduced, and it will be gradually reduced down to 10 million rubles until year 2028, as you can see on the slide. So from the practical perspective, and again, with the focus on the international business, I wanted to highlight the following key considerations. So first of all, same as it happened in year 2018 and 2019 when the VAT was last increased from 18 to 20%, this increase raises questions regarding the application as a transitional period for the long-term operations, especially when, for example, the advance payments and the shipment following this advance payments take place in different periods, like, for example, when the advance payment is received in year 2025 and then the shipment takes place in year 2026. I should mention immediately that the tax legislation does not contain any specific transitional provisions in this regard. However, there are explanations issued by the Federal Tax Service back in the year 2018 when the VAT rate was last changed, and they are still valid now, as it was confirmed by the Federal Tax Service at the end of the last year, which stipulate these main transitional rules. And one of them, as I just mentioned, is that if the shipment occurs after the change of the tax rate, while the prepayment was received in the year when the reduced tax rate was applied, like, for example, the prepayment took place in year 2025, but then the shipment takes place in year 2026, the VAT needs to be recalculated according to the new rate, and the guidelines of the Federal Tax Service, which I have been mentioning, they contain quite detailed instruction as on how they should be managed and reflected by both parties. So if you participate in some similar operations, I really invite you to get acquainted with this guidance, because they might help you best understand together with your counterparty how to fulfill the tax applications under the new rate. But there is an important exception which remained valid in year 2026 concerning historical flows with foreign counterparties, the cross-border operations, and particularly the services provision. So the explanations of the Federal Tax Service tell us that in both cases, when, for example, the prepayment is made in year 2025 and then the shipment is made in year 2026, or vice versa, when the shipment takes place in year 2025 and then the payment for the shipment takes place in year 2026, there is no need to recalculate your tax obligations due to the change of tax rate, because specific rules apply to these cross-border flows, which is quite a positive, I would say, position for the tax payers. However, I really invite you to analyze your particular operations from this perspective very closely, because different approach may be taken when, for example, the services are long-lasting and some elements are being provided in different periods. Another practical point which I wanted to speak about today is that in the end of the last year, Russian Constitutional Court issued a very important decree, and I even indicate the requisites of this decree on the slide, governing the situations when the parties to the transaction do not indicate and do not regulate in their contractual arrangements the way the price should be changed in case of the VAT increase. For example, the most frequent case is when the price is determined inclusive of the VAT, and then the contract lacks any specific provisions on the way the price should be recalculated in case of the VAT increase. And the Constitutional Court confirms that indeed Russian tax legislation lacks proper transitional provisions which need to be further elaborated. But in absence of these provisions, there are several points to which attention should be paid when determining the ultimate VAT effect for both parties. One of them is the status of the counterparty and whether or not this counterparty is entitled to get the VAT offset against its output VAT. If this is not the case, the court concluded that the parties should first try and settle any conflict amicably and try and negotiate a new price. However, if this is not possible, then the supplier may seek an increase of the contract price in court. However, it can only be obtained for not more than 50% of the additional amount of the VAT. So basically speaking, here again, I will be giving you a very simplified approach that if the VAT increase is 2%, like in our case, from 20 to 22%, then in absence of an amicable arrangement, the supplier can seek through the court not more than basically this 1% out of the 2% increase. This decree is also very interesting because it contains other statements, like, for example, that in any case, the prices to the individuals, charged to the individuals, should not be reconsidered, which is, well, I would rather assess it as a sort of a political statement because from the economic perspective, obviously, it is not always possible. And also importantly, this decree, again, as I mentioned, it concerns the situations when the counterparty is not entitled for the VAT offset. However, in absence of specific provisions for a situation when the counterparty is entitled for the VAT offset, this regulation still remains a sort of a gray area. Which is why it becomes of a crucial importance to properly formulate the VAT clauses in your agreements, either cross-border agreements or any domestic agreements carried out by your subsidiaries in Russia, because as the practice demonstrates, the vast majority of the questions and of the disputes arise in a situation when the agreement lacks proper tax provisions. And here there is a variety of the provisions which may be considered by you or your counterparties. Well, most obviously, it is always suggested whenever it is possible to determine the price without the VAT, and then indicates that the VAT is charged on top based on applicable rate. Because I also saw situations when a specific rate is not mentioned in the agreement, the counterparty tries to take the position that still this price determination does not specifically regulate the situation of a change of rate or change of VAT treatment. Also, it is suggested to provide specific provisions in line with the explanations of the Federal Tax Service that I have been mentioning regarding the way the VAT will be paid and like divided by the parties in case of long-term operations with shipments and payments taking place in different periods. And apart from the standard provisions, also in practice, I always suggest to make sure you include into the agreement the provisions on the counterparty status, his good faith, and his compliance with the tax obligations, because it's quite a frequent situation in Russia when due to a fault of your counterparty to properly fulfill his tax obligations, you as a purchaser may, for example, face issues with the VAT offset. And in order to be in a position to regulate this issue not in the tax domain but in the civil law domain in your relations with your counterparty, it is always suggested to introduce proper warranties on the counterparty side to the agreement, and also to provide for certain indemnities or compensation of damages provision in case such warranties are being breached. Speaking about compensation of damages, also a practical tip, please do not forget that when this compensation is being paid, in most of the cases it will be subject to the corporate profit tax or withholding tax, and in this case you need also to provide for a specific coefficient to make sure that you in the end receive the net amount of any compensation due. Apart from the increase of the VAT rate, I will go very briefly through some other key changes. There were actually plenty because the law, which was adopted in the end of the last year, counted like 350 pages. But still, speaking about the most important ones, we have a change of administrative procedures and the way the tax audits are being carried out. First of all, we have the extra territoriality rule introduced into the tax audit procedures, meaning that now the tax inspections from other regions can be involved in carrying out of a tax audit in respect to a specific counterparty, to a specific taxpayer, meaning that even if the taxpayer is, for example, registered in Moscow, keeping in mind that Moscow tax inspections are frequently being overloaded, the specific taxpayers may now be reviewed by the regional tax inspections. Apart from that, the powers of the tax inspections during the tax audits have been expanded. And on the other side, the reduction of fines due to mitigation circumstances have been limited to not more than 10 times, which in combination again brings us to the idea which I was mentioning just in the beginning of the webinar, that the tax control becomes tighter and the outcome of these tax control procedures becomes more significant for the taxpayers. Speaking about other changes which may be of importance for international businesses is that, first of all, the foreign ownership or control in accredited IT companies which are entitled to receive specific tax benefits in Russia, quite important tax benefits, has been limited, and from year 2026 it may not be more than 50%, meaning that any accredited IT companies being under like full foreign control need to restructure either the participation interest or the way they hold the respective IP assets. And apart from that, the tax perimeter, the perimeter of the tax incentives for these IT companies was reduced. So moving a little bit more into the international tax landscape and new requirements and obligations for those companies which still make part of multinational groups. What I would like to start with is that last year, several important clarifications of the Federal Tax Service have been issued, and I provide these clarifications on the slide, which materially extended the practical concept of the multinational group of companies under the Russian law. Just to remind you that according to the Russian tax code, in order for the group to qualify as a multinational group of companies, which is basically a Russian equivalent of an M&E, two criteria needs to be cumulatively met. One of them is that this MGC should count at least one Russian taxpayer and at least one non-Russian tax resident among its members. But on the top of this, there is another criteria saying that the consolidated financial statement should be prepared in respect to this MGC, or they would need to be prepared in case the securities of this MGC were admitted to trading. And this, very abstract second criteria created a lot of discussions in the professional world in terms of how they should be construed and analyzed by the taxpayers. And basically, the Federal Tax Service pronounced in their clarification that, in fact, these criteria, in terms of the necessity to prepare the consolidated financial statements, the way it has been formulated now, is basically met automatically. And in order for the group to qualify as an MGC, it is simply sufficient to have one Russian tax resident and one non-Russian tax resident within the group. So just to put the long story short, a very simple structure when you have a foreign shareholder and a Russian subsidiary, or vice versa, the Russian shareholder and the foreign subsidiary already constitutes an MGC. So now let's dig deeper into the obligations faced by these newly qualified MGCs. The brand new rules introduced in Russia from the year 2026, which are described on this slide, are the Russian version of the Pillar 2 standard applied on the international level. So basically what the Russian legislator did, they tried to create a sort of a mechanism which would be aimed at protecting Russian tax base from the situations when, according to the Pillar 2 concept, the income of the Russian taxpayer could be taxed abroad, either under income inclusion rules or UTPR rules. So basically what the new law says is that in order for the new rules to apply, the following conditions need to be cumulatively met. First, the Russian company should make part of an MGC, which is obvious. The ultimate parent company of this MGC should be a foreign resident. So the situations when, for example, an MGC is ultimately controlled by the Russian resident are out of scope. The amount of the annual revenue of such MGC for each of the two preceding periods should make at least 750 million euros. And either the foreign parent company of this MGC or other members of the MGC should be residing in the jurisdiction applying the extraterritorial taxation rules, like, as I mentioned, UTPR or income inclusion rules. So if all these criteria cumulatively met, the taxpayer need to assess its effective tax rate in Russia, which is calculated based on a simple formula when the amount of total taxes paid is divided by the amount of total tax base. So if the effective tax rate, according to this formula, makes less than 15%, which may be the case again for the IT companies or the companies applying different regional tax incentives, then the tax needs to be additionally paid up to 15% to the Russian budget. And this is not any new tax introduced. This is a part of a corporate profit tax, and the corporate profit tax return will be specifically updated to include this additional tax payment. It is important to mention that, in fact, Russian tax legislation also provides for certain adjustments when this calculation is being made. In particular, these adjustments concern some operations with the shares or participation interest. However, still, even if the concept of these rules, yes, the idea of these rules is very similar to the OECD concept, there is still a number of quite important differences, and most importantly is that the tax base in Russia is calculated separately for every taxpayer and not cumulatively for a jurisdiction. So even in a situation when, for example, an MGC has several subsidiaries in Russia and only one of them is applying the tax incentives, still additional tax could be payable to the budget. Another question is whether this additional payment made to the Russian budget would actually count as an equivalent of QDMTT in the international perspective, which is not fully clear at the moment because Russia is not officially part of Pillar 2 initiative anymore. So there is a possibility which needs to be further analyzed that application of these new rules could lead to double taxation. Again, as I just mentioned, these rules are brand new. They are introduced from year 2026, and first reporting and payment obligations will happen in year 2027. But I wanted to outline to you the main concept. Apart from this, I wanted to remind you very briefly what other obligations are being faced by the participants of the multinational groups in Russia. First category of these obligations are those related to the so-called three-tier documentation and transfer pricing documentation. I will not go through every category of these reporting forms, but I wanted to remind you. I just wanted to focus on certain specific forms, like for example, please. Don't forget that notification on participation as a multinational group of companies needs to be filed in Russia on the annual basis because for some reason it's a common mistake for the multinational groups to file this notification only once and then skip this obligation. No, it's still an annual notification, same as notification on control transaction. Another point is that please be reminded that since the exchange of CBCR reports with Russia was seized by multiple jurisdictions, now Federal Tax Service is entitled to request such CBCRs immediately from the Russian subsidiaries. It is in line with the Russian legislation, and in years 2024 and early 2025, we saw a mass request of such CBCR reports. It was so massive that even the systems on the Federal Tax Service side aimed at processing these reports were not like fully and sufficiently prepared to administer all these reports, which gave rise to multiple technical issues, and I even faced it with some of my clients. As a reaction to this, the Federal Tax Service further elaborated a sort of a template letter which they propose using by the Russian subsidiaries to request the necessary information from the group, but also some guidelines on what to do in case when some technical errors in terms of filing the CBCR report occur. If you are interested in these files, please let me know. I will be glad to share them with you. But again, please be reminded that CBCR reports may and most probably will be requested, and you should be ready to provide them. Another point that I wanted to mention is that the tax authorities started requesting more frequently the master files. Again, this obligation existed in the Russian law also previously, but now since the exchange of information is being very limited and the tax authorities cannot gather sufficient data by themselves, they ask more and more from the taxpayers, and they also may ask for a master file. So from this perspective, it is also suggested to review the master files that you have at the group level to make sure that any information presented in the master file doesn't contradict with the local file which you prepare locally, which is sometimes the case, and also to see like if any other amendments are needed to this document before you ever disclose them in the Russian tax perimeter. And also here again, a final reminder, please remember that from previous years, the extended disclosure requirements apply within preparation of the local files in Russia. Extended requirements concern the information regarding your foreign counterparties, the documentary support of the functional analysis, and so on. So also keeping in mind that the benchmarks in Russia should be updated on a yearly basis, and some of this information also needs to be updated on the yearly basis. It is a high time to start this process for year 2025. Another category of the obligations which I wanted to go through very briefly is the obligations taking place already from the banking and the currency control perspective. From previous years, Russian participants of multinational groups in certain situations need to disclose the information on the foreign bank accounts of the foreign members of the same multinational group. This mainly happens in a situation when 50% or more of such MGC are located in Russia. And this is most frequently the case for some small groups, as I was mentioning in the beginning of this blog, when, for example, you have only one Russian resident and one non-Russian resident within the group, keeping in mind that for this type of reporting, no revenue threshold applies. In this situation, when 50% or more of the group's assets are located in Russia, these obligations take place. I can tell you that since these rules are quite new, we have been discussing them a lot with the Federal Tax Service in terms of some oral discussions, and according to oral clarifications that they gave, in a situation when the Russian member of the MGC is not like a ultimate parent entity or is not an authorized representative from the MGC perspective, he is not obliged to file this reporting for all the MGC participants, but only to those who either participate in his capital directly or indirectly, or those in whom they participate directly or indirectly. So this picture, which I provide on the slide, I wanted to illustrate this approach. But again, please keep in mind that this is according to the oral explanations of the Federal Tax Service at the moment. Another topic which I wanted to briefly cover today is the double tax treaty landscape and also corresponding changes to the Russian tax legislation. First of all, as a short reminder, the vast majority of the DTTs with Russia remain suspended. And you can see on the slide the domestic withholding tax rates applied in Russia to different categories of the income. However, from year 2023, we had a list of operations carried out with unrelated parties in respect to which the double taxation treaty benefits could still apply in case such payments are taking place with the unrelated foreign counterparty. These provisions were temporary and they were expiring in the end of year 2025. And there was a certain discussion whether or not they will be prolonged. So in fact, they have been prolonged, but not fully. I tried to very briefly demonstrate on this slide what specific provisions have been prolonged and what provisions have not been prolonged. I will not go through every category, but just to highlight something which is of the most importance to the businesses based on my experience at least, is that unfortunately one of the exceptions which have not been prolonged is related to the income from the use or granting of the rights to use some objects of copyright or related rights, from which most importantly the software rights, the rights in the software. So the use of the software provided by the foreign unrelated counterparty can no longer unfortunately benefit from the specific provisions and these prolonged treaty benefits. Also, not all categories of revenues from the international transportations could still benefit from this prolongation, because it was conserved only for the maritime transportation. But again, please feel free to get acquainted with other categories of the income. The webinar materials will be circulated. If you have any further questions, please let me know. Another point in terms of application of withholding taxation and DTT landscape, which I wanted to briefly highlight, is that Russian Ministry of Finance very recently issued a letter clarifying the application of withholding tax in situations when the Russian company is providing cash to its foreign subsidiaries or its foreign counterparties under different operations, like contribution to the charter capital of a foreign subsidiary, contribution to the assets of a foreign subsidiary, or provision of a loan to a foreign counterparty. So the Ministry of Finance confirmed that in a situation when the loan is being granted or the contribution to the charter capital is being made, it is assumed that the recipient of such cash is not obtaining any economic benefit, and at least certain consideration takes place, or an obligation to return this debt takes place, which is why such a transfer should not be subject to a withholding tax. However, in a situation when the Russian company makes a contribution to the assets of its foreign subsidiary, according to the Minfin position, the foreign recipient derives an economic benefit in absence of a consideration which should give rise to a withholding tax. In case the double taxation treaty is still in force in respect to the separation, it can be applied, but the taxpayer should be ready to prove the actual economic objective of the separation. Why I wanted to highlight this point is because when we face different requests regarding the possibilities to transfer cash out of Russia, we are frequently asked whether the Russian entity can, for example, establish a subsidiary and make contributions into the subsidiary, even in some friendly jurisdiction. And the answer is generally yes, but first you need to keep in mind that in the vast majority of the cases, such investments are subject to regulatory clearance. But also, in case when you make this investment by way of a contribution to the asset, you should consider the withholding tax. Continuing the topic of the double taxation treaty landscape, I will go very briefly through the new double taxation treaty, which is in force from year 2026. It is a very long anticipated DTT with the UAE. So this treaty, as I just mentioned, recently came into form. It provides for a 10-10-10 formula for main categories of passive income, such as dividends, interest, and royalties. It also provides quite standard provisions regarding the permanent establishment, taxation of the business of profits, and so on. However, it is not fully standard. First of all, I invite you to pay particular attention to the limitation of benefits provisions in these double taxation treaties, which are quite strict. And also, please keep in mind that when you make payments and you want to benefit from this treaty, you should, like for any other treaties, but since you know the vast majority of DTTs are being suspended, this topic is not as frequently discussed now in Russia. So please be reminded that you will need to obtain the tax residency certificate from your counterparty located in the UAE, but also the proof of the beneficial ownership in the income, just to make sure that this company is not further transferring this income elsewhere, for example, to some jurisdiction with which the DTT is suspended. I have been recently discussing it with one of my clients regarding the royalty payments, and was just reminded that, for example, in respect to the royalties, it is suggested to create a sort of a defense file proving the rights in the IP on the side of the UAE company, proving the active character of this company and its corporate independence. Again, for each specific category of the income, this defense file could be different, so please pay attention to these points. Also, this DTT, and I think it's the only one so far in Russia, provides for specific rules of taxation for the remote employees and so-called online freelancers, which are taxed on a per employer basis. It was specifically introduced for situations when the employees of the Russian entities moved to the UAE to live and wanted to benefit from the UAE tax rates. In order to limit these structures, this rule was introduced to the DTT. In addition to this, please be informed that from the end of last year, the UAE was excluded from the so-called blacklist of offshore jurisdictions, which opens the door for some additional operations in terms of transfer of properties, so for example, payment of dividends from the UAE subsidiary to the Russian company, or for example, sale of shares by the Russian company, the UAE subsidiary, which can from now on be subject to specific tax incentives or even tax exemptions, which is also obviously a positive news. However, unfortunately, the exclusion of the UAE from the blacklist did not have the anticipated effect on the transfer pricing, and I will be speaking about it in the next section of my presentation today. So again, as I mentioned, now I wanted to move a little bit further into the transfer pricing compliance rules. I know that there was quite a lot of Russian-speaking listeners registered to these webinars, and for you guys, I wanted to let you know that I will be conducting a specific webinar dedicated to transfer pricing probably later in April. But still today, I wanted to go quite briefly through the recent changes and recent trends in this domain. So first, please be informed that from 1st January 2026, the scope of the controlled transaction for transfer pricing purposes have been extended again, because we have been facing these different sorts of such expansions within last several years. So now, if the transaction is carried out by the Russian taxpayer with a foreign unrelated counterparty, and in a jurisdiction when such counterparty is located, the corporate income tax rate is 15% or lower, then such operation will be controlled for transfer pricing purposes. Actually, this new rule poses a lot of questions from administration perspective as on how this information should be reviewed or justified by the taxpayer. And the Ministry of Finance issued a specific letter stating that they will not be creating any list of jurisdictions which are actually apply a 15% or lower CPT tax rate because the foreign jurisdiction is constantly evolving. So it would be the taxpayer's obligation to check and justify the tax rate of its counterparty, and in order to do so, this taxpayer can rely on the some official act published in the foreign state, which is enforced in the tax period when this transaction is carried out and is translated into Russian. Also, it is important that if, for example, your counterparty applies some specific tax rate due to application of certain tax benefits or whatever, this specific tax rate needs to be checked, not the standard tax rate. So here again, as I just mentioned, unfortunately, the operations with the UAE residents still remain subject to a transfer pricing control due to this specific rule, because the corporate income tax rate in the UAE is 9 or 15%, and in order for the exemption to apply, it should be more than 15%. And here we also summarized very shortly the list of the jurisdictions, the so-called friendly jurisdiction, and the rates, just to illustrate the operations with what jurisdictions could be subject to new transfer pricing rules. I only indicate the so-called friendly jurisdictions here because the so-called unfriendly jurisdictions are blacklisted and are subject to a transfer pricing control on this basis. And in the end of this section, I also wanted to remind you very shortly, I will not go through all the changes to the transfer pricing law effective from year 2025. If you're interested in this topic, I think you can find our previous webinars, which I was given on this, because they were quite material and significant. But I wanted to share with you this, a sort of a case study when we made the calculation of the risk for one of our clients, just to illustrate you how material the tax implications could be in case of the breach of transfer pricing rules due to various factors. Like first, from year 2025, if the tax authorities consider that the prices charged in the transaction deviate from the arm's length level, they make the adjustment not to the minimum value of the operation but to the median, and they apply both the corporate profit tax and the withholding tax due to application of secondary transfer pricing adjustment rules, and also an extended fine applies in the situation which is in the amount of the additional withholding tax applied due to secondary TP adjustment. So in this particular example, you could see that in a situation where the actual operating profit of the company was about 700 million rubles, the amount of total additional tax accruals under these new rules, including the CPT, the withholding tax, the increased fine, and so on, could go up to 325 million rubles, which is almost half of the operating profit of the company. This example is a little bit extreme because it is stemming from a specific line of activity, but however, it is quite illustrative in terms of how important the transfer pricing compliance is from the previous year. Continuing the topic of cross-border operations and transfer pricing compliance, I also wanted to talk a little bit about general categories of the risks being faced by the companies in Russia exercising the cross-border operations. So on this first slide, I just wanted to give you a very, brief metrics showing what categories of risk could be faced by the Russian companies participating in such operations. Like one of the most frequent examples, which I will be speaking about in a bit more detail later, is acquisition of intergroup services. So in case the tax authorities doubt the reality of the payment and the reality of the service, Russian taxpayer can face the denial of tax deduction for corporate profit tax purposes, which gives you like 25% CPT, the denial of VAT offset, which is 22% now, additional withholding tax in case such payment is, for example, reclassified either into dividends or other income. Because, for example, for intergroup services, the withholding tax is already 15%, but if, for example, the tax authorities at all doubt the reality of the operations, they can reclassify it into other income subject to 25%. I already mentioned the transfer pricing on the previous slide. And apart from that, you should also keep in mind the currency control risk, which give rise to material fines, and the regulatory risks, because we have certain very limited but still quite disturbing practice in Russia when the operation is considered to be unlawful due to the breach of the presidential decrees, like famous IKEA case or Ravin Russia case, in which case like the total amount of the transaction is basically being confiscated to the Russian budget. And again, to give you a case study, this is just an example of how we calculated to one of our clients the amount of the risk in a situation when the group was willing to introduce certain services which were actually very doubtful for this particular taxpayer, and you can see that the total amount of the check or premium of the risk exceeded the turnover amount for this operation. Again, this calculation is a little bit extreme, and I'm not saying that every of this risk will be happening to you guys in case you participate in cross-border transactions, but at least you need to count for this risk and to keep them in mind. Here again, very briefly, I summarize the operations which are most frequently reviewed by the tax authorities, and apart from the intergroup services, which I was mentioning already, these are different categories of passive income, such as royalties, loans being paid in both directions, debt forgiveness, which also give rise to additional taxation in both directions. Various categories of the transfer pricing adjustments. Since our time is very limited, I will not be focusing on all of them, but again, please drop me a line if you would like to dig any of these topics deeper, because we elaborated them for many of our companies. And to continue the topic of the intergroup services and so-called famous management fees deductibility, I wanted to highlight to you a very recent court decision which appeared in the very end of the last year. Where specifically the tax authorities reviewed the payments made for the intergroup services, yes, for the management fees for their economic justification. So, first of all, the tax audit procedures themselves were very lengthy and very painful for this taxpayer. The tax audit lasted almost 5 years, and then almost 3 years of the court proceedings in the first instance alone. And it was for the amount of additional tax charges, roughly 80 million rubles, which, to my personal opinion, is not that much for this level of control being exercised. The arguments which were applied by the tax authorities, and yes, I need to highlight that the court ruled out in favor of the tax authorities, were quite standard. That the supporting documents was not sufficient and was not detailed enough, that there was an overlap between the services acquired from the group and those acquired locally or exercised by the company's employees. So basically, the tax authorities decided that this is more a compensation of the shareholding activity rather than a service. Like bringing such arguments that, for example, in the financial domain, the services mainly constituted a form of control over the company's activity, which benefited to the group more than to the company itself. And on this basis, the tax authorities denied the deductibility of the respective costs for taxation purposes, and also applied additional withholding tax. And here, just to remind you what the tax authorities are mainly looking for in case of such controls. So they indeed check that the services are genuine. So they ask for the whole defense file, justifying the services being rendered, so they are not satisfied with just the acceptance certificates or some reports drafted by the counterparty. They want to review the whole file, like business correspondence, presentations, the minutes of the calls and the meetings, and so on. And in fact, collecting these documents when the tax audit has already started is very time consuming, which is why it is highly recommended to prepare the defense file in advance and to implement the proper internal procedures within the group aimed at collection and processing of this document. Also, it is very important to prove the business rationale behind these services, to prove how exactly they benefit to the Russian entity and why the Russian entity acquired it from the group and not anyone else. And from this perspective, it is also very important to check for absence of duplication, or at least immediate duplication with the function of the own employees of the company or any other external providers. And in practice, it's quite a hard cookie, because quite frequently these functions are very closely integrated into one another, and it's a frequent situation when in one process you can see involved both the local taxpayer and its team, the group, and also some external provider who helps administer the whole procedure. And those are, complicated cases which need to be explained to the tax authorities. Also, particular attention should be paid to the pricing methodology, which needs to be transparent and consistent for the entire group, because the tax authorities are requesting the justification of the pricing terms as well. Very briefly, again, I will give you just one case study which we had very recently with our team. When the tax authorities requested the justification of the intergroup services costs within the so-called pre-audit procedures, which are very frequent in Russia. So they ask for certain information before they open a formalized tax audit. And the taxpayer was granted 10 business days to provide the necessary documents and explanations. And unfortunately, the defense file was not ready for this taxpayer. So when we got involved, the first thing that we did is that we extended the deadline to provide the necessary documentation, because obviously 10 working days is not feasible, but please keep in mind that you cannot expect a material extension. So we received 20 business days, which is much better, but still it's not something material. We reviewed the documents which the group managed to collect in such a short term, and out of the full package, which was about 400 documents, we selected about 100, which in our opinion were more or less suitable, considering all these practical questions normally being posed by the Russian tax authorities. And then when explaining the absence of shareholding activity within the services and the pricing terms, we made reference to OECD guidelines and transfer pricing rules, which limit control over the arm's length level of the prices for the services within an ordinary tax audit. But it was quite, a complicated example. Again, in practice, I really suggest you implement the necessary procedures like in advance. And the final block which I wanted to cover in my presentation before I proceed to the Q&A section are the currency control implications and the regulatory landscape, because these are again the new trends in the Russian control procedures, which develop very quickly, and they also may take place in a situation which we have been discussing before, like payment for the intergroup services, when the tax authorities on the top of the tax application impose additional fines from the currency control perspective. First of all, because they classify the transaction as fictitious, the cross-border payment as fictitious, and in practice they quite frequently use the same arguments as within the tax audits, that the documentation is not sufficient, that the economic benefit for the Russian entity is not evident. What is quite painful here is first the consequences, because the amount of the fine is from 20 to 40% of the transaction amount, but it may also give rise to a criminal prosecution for the management of the Russian taxpayer making the relevant payments. And also these consequences may take place together with additional tax accruals. And even if the taxpayer amicably settles additional tax as a result of a tax audit, the currency control applications may still take place. Here, again, very briefly, I wanted to summarize the transactions which are in the focus of the tax authorities, who are also the control authorities for the currency control, such as transfer of material advance payments, or, for example, again, related party payments, as I was mentioning, the flows which are not sufficiently documented. So this list of transactions which are in focus of the controlling authorities, it is not anyhow anywhere officially published, but this information is based on our practical experience and also our communications with the Federal Tax Service. Another point which I wanted to draw your attention to is that not only the situation when the Russian entity is making a cross-border payment could present a risk, but also mirror situation when, for example, a Russian entity has a material receivable stemming from the foreign counterparty, and this receivable is not settled in time, then additional fines can occur, which can go up to 30% of the transactional value. But if the amount of the unsettled receivable exceeds 100 million rubles, the amount of fine can go to up to 100 of the transactional value. This is very important consequences because it is frequently being missed in the intergroup flows being planned. And we see a growing practice of the tax authorities presenting relevant claims. I can tell you that from practice, again, I provide here a case study for one of the projects we recently carried out. From this perspective, when the Russian entity indeed had a very material receivable stemming from its foreign counterparty, and this contract was not registered with the bank for various reasons. So we reviewed the set of documentation. We elaborated the defense file to justify why the performance timelines were actually prolonged and prepare the necessary contractual documentation. And also, most importantly, we successfully received the governmental commission approval because this historical receivable was settled via offset against a cross loan obligation, the settlement of which is subject to the governmental commission approval. So my point here is make sure you regularly audit both the payables and receivables of the Russian entity resulting from cross-border operations, and make sure necessary procedures are being implemented. And just in the last 2 minutes that I have of the webinar, and then I will move to the Q&A section, I just wanted very briefly to remind you that payment of dividends, a very frequently asked question, is still remains limited in Russia because due to restrictions under the presidential decree. So such payments can be exercised with whether within the limit of 10 million rubles per month, or upon receipt of the governmental commission clearance, unless, of course, such dividends are paid on the specific Type C account, but this cash is effectively blocked in Russia. From the tax perspective, what I frequently see in question now is that various, I would say, schemes apply to pay out the dividends from Russia, especially when the dividends are paid disproportionately because of some difficulties of accepting the payment on the foreign shareholder side, or for example, when the dividends are declared and not paid, may give rise to additional tax implications and the additional tax burden in Russia. So any such operations and the schedule of payment of dividends needs to be carefully analyzed before you proceed with the payment. And to finish my webinar today, I wanted very briefly to highlight to you guys the letter from the Ministry of Finance, which was issued, well, it was officially issued in the end of the last year, but it became public very recently in the year 2026, confirming that a liquidation of a Russian entity held by the so-called unfriendly shareholder is subject to obligatory permission issued by the governmental commission, because I know that multiple rumors existed in respect to this operation. Certain Russian notaries agreed to register liquidations without governmental commission. We are also aware of the cases when, for example, such liquidation is registered by the notary, but then the tax service rejected the liquidation file in absence of governmental commission. So this is just to highlight to you, because it's also a very frequent question, that now it is officially confirmed by the Ministry of Finance that GovCom clearance is needed here. So now I will see if any questions were posed during this webinar. If you think about any other questions after the webinar, also please feel free to contact me. And I wanted to share with you in the end the QR code, well, to our Telegram channel, which is in Russian, but also the navigator on the tax reform, which I briefly mentioned today, where we try to describe both in Russian and in English some key changes to the law and some practical tips. So please feel free to download this file in case this is of interest for you. So please let me check if any questions. So colleagues, on my side, I don't see any questions in the Q&A section. If any, okay. Okay, so I only see the thanks for the presentation. So If no questions at the moment, thank you very much, colleagues, for your time. And I really hope that this presentation was helpful to you. We will, of course, share all the presentation materials after the event, and stay tuned for our further events. Thank you very much and have a nice day. Goodbye.